My name, for you, those who don't know, is David Worsfold. I'm a freelance journalist nowadays. It's actually 39 years ago next week that I stepped into the role of editor of Insurance Age, and you've been stuck with me ever since. But it's a great pleasure to be here. It's wonderful to be at a live event. I've spent, like all of us, the last 18 months looking at everybody on a screen, and gosh, there are human beings behind those screens, and you're here today. So it really is a great pleasure to have a live event to host. We have an expert panel of key stakeholders in the MGA value chain to help us explore that life cycle of an MGA, both now and looking into the future. This morning's panel, for those of you who are here, explored the new normal for the market and MGAs in particular. And it did remind us of just how uncertain our world now is, how we're all trying to home in on what that new normal looks like. And the world of MGAs, new risks, new ways of working, increased consolidation, and crucially, in the life cycle of an MGA, a new start-up environment. So there are clearly opportunities, but there are also challenges. Regulation, technology, the risk appetite of underwriters, and that ever-present requirement nowadays, quality data. So faced with the challenges, what do MGAs need to be successful? What do they need to seize the opportunities and continue to demonstrate their USPs, your USPs, against insurers? And our panel is going to help us find answers to some of those questions. We've got Richard Tocq, who's Group CEO of Robus Group, an independent insurance management and advisory group, which offers services to a range of MGAs. Richard has some simple advice, which we'll probe him on a bit. He says, consider taking skin in the game to take control of your MGA destiny. So Richard, we'll ask you to expand on that in a minute. Sam White is CEO of Freedom Services, which is a collection of motor-centric insurance businesses. So she's got a deep insight into the personal lines market and recently launched Stellar Insurance in Australia, a motor MGA designed specifically, and she says, unapologetically, for women. Simon Mabb is Group Managing Director of Romero Insurance, independent broker, involved in open market placement, schemes and niche business lines, and writing new businesses in the DNA of his firm. He believes that good MGAs should be at the front of market innovation, and innovation is, again, something that we'll probe in the next 45 minutes. Clive Nathan is Chief Executive of Underwriting at Global Risk Partners. He's in his 35th year in insurance. I can beat you, just. Having begun his career as a graduate trainee at Commercial Union. And he's led teams at insurers, brokers, MGAs, and has seen the growth of MGAs firsthand across many different sectors. So that's our panel. We're going to get them talking in a second. But that's where you come in, because I can ask all the questions, but I really want them to answer your questions. What do you think the key challenges are in the life cycle of an MGA as we emerge into this new normal, this changed world? So we want your questions. Hopefully you've all got your app and you know how to put the questions in that. You put the questions in, they will come up on my screen here and I will ping them to the panel. So please get tapping away. Well, while you're thinking of your questions, perhaps I can kick off. As I said, this morning's panel helped us define the new normal in terms of trading conditions and likely working patterns. But in the life cycle of an MGA, obviously the start-up phase is absolutely crucial. Where do you get the capital from? Where do you get the capacity from? And you need partners that share your vision, share your risk appetite. And I just wonder, has that changed as we emerge from the COVID world? Richard, would you like to pick that one up to start with?
Happy to, yeah. So as we've seen as a result of the reviews at Decile 10, changing appetites of insurance capacity and so on, we're seeing good expertise available and available to take opportunity in the market, new start MGAs, whether these be niche or sort of more mainstream. But as you say, the challenge is on securing that capacity and is on securing the capital. From a Robus perspective, if we start maybe with the more mature MGAs, here we've got to think about the alignment of interests with the capacity. So protecting that capacity to ensure that we're not going through an annual cycle, that MGAs can plan forward by having slightly longer term deals. And this is where we see and advocate, where appropriate, the investment in your own portfolio. So are you confident in your own underwriting results? And to that end, we see some MGAs setting up risk retention vehicles to participate in their own risk, aligning their interests with that capacity. And that is both opportunistic and also from a protection perspective. We've seen more recently some failures in the MGA space of the result of certain carriers and so on. You don't want your capacity disappearing overnight, so can you source some capital to help participate in those risks? So we are seeing that. From a sort of start-up and a new MGA perspective, there are some really good turnkey operators out there that can enable these new experienced teams that are looking to take the opportunity to support those. So platforms that can allow those individuals to focus on the underwriting and the support services that go around that, can allow them to focus and let those people that provide the platforms focus on things such as compliance, engaging with TPAs and sourcing reinsurance and so on. So there are opportunities, and there are many combinations in between that. That's probably enough to get going with.
Richard, thank you for that. Sam, you've started a new MGA down under.
Yeah.
So how easy was it to find the right partners for that?
I mean, it's never easy. I mean, sourcing capacity is unbelievably hard for MGAs, particularly in motor at the moment. And a lot of that's around the price of the XOL. When I set Pucker up in 2016, I think our cost of XOL was probably 12 points. I think for the same level of retention, it's probably 23, 24 now. So when you look at that and in sort of the picture of how do you get to profitability, which ultimately is, I would say that the two things that capacity providers are looking for is profitability and also future-proofing their own business. So I see deals coming in where they're looking for MGAs to find the opportunity that they can't get into as quickly as they can in new areas of the market that they potentially want to explore but don't want to put their whole resource into. So Stella in Australia was no different. It's a slightly more benign market over there, and certainly the cost of XOL is a lot lower than it is in the UK. But for me, it was around those sort of three cornerstones. So I needed to get investment, I needed to get a VC behind me, I needed something unique, which in Stella was probably the media deal that I did on a sort of inventory for equity to get the brand out into the market. And I wanted paper that I thought would be credible, and we were very fortunate to get QBE behind us. But from sort of deciding it was a great idea and jumping on a plane to actually going live was probably a good couple of years, and that was just about getting all of those pieces in place to be able to go forward.
Just to follow up on that, how much of a challenge has it been to set that up in the restricted, constrained world we've been living in the last 18 months? Because you just said you jumped on a plane, but that must have been before March 2000.
Yes.
Because the Australians haven't let many people jump on planes.
No, they won't let me in, so no matter how much I'm banging on the door. So certainly to do the deal, and I'm a great believer in this, I think deals are done with people and on a face-to-face basis. So certainly the first deal I would have never been able to do remotely. But ironically, through COVID, it's actually helped me. I've got a management team on the ground, but of course everybody was working on video screens. So it made no difference then from a connectivity viewpoint that I wasn't in the room with them, because we were all behind screens. And so actually I felt more connected to the team in Australia through COVID probably than I would have done in the normal run of things, where I might jump on a plane 3 or 4 times a year and get in a room with them. At the first meeting they had face-to-face, because they kind of became unlocked before we did, I felt very bereft that they were sat in a room celebrating, launch, and they've got champagne, and I'm just a video screen in the corner. So I'll certainly be great. I'll certainly be grateful to get that.
I'm sure you had your own champagne.
Well, it was 8 o'clock in the morning, so that might have been a little bit inappropriate.
Sorry, what's wrong with that? Someone tell me. No, it's a great story. So thanks for sharing that. Simon, you put a lot of emphasis on innovation, I know. So how easy is it to find partners that share innovative visions?
I think it sounds easier than it probably is. I think it's as Sam said, it's about dealing with people and getting them to believe in that vision or what you're trying to achieve, and them to understand the dynamics behind it. And then you can then sell that vision and look to build on that and perhaps get someone to take an innovative position. But, I think, in the past I've had to do a lot of legwork around insurers. Sometimes when you're talking about innovative things, insurers like things in boxes. And when you start doing things that aren't quite in the box that they're used to, that becomes more difficult trying to get someone on board. So I think that's where the challenge with innovation comes, is if you're working outside of what people are used to in terms of risk appetite or boxes.
And that sort of brings us to what are the USPs? What are MGA's USPs? Because that's what's going to attract the brokers to use them. And Clive, how do you look at MGAs and whether they're innovative? What are their USPs? What makes them get ahead of the crowd? Gives them that edge.
Yeah, I think there's three things. The way I look at MGAs is, number one is, what do you know that they don't, as far as insurers are concerned? What do you do that they don't? So are you accessing distribution that they're not? Are you accessing markets that they're not? And then thirdly, can you prove it? Because a lot of MGAs, in my experience, talk a good game around niche, around distribution, and the way we're going to differentiate ourselves is we're going to have a much higher service proposition. Insurers have heard all of that before, and unfortunately, unless you can prove it, they're not really interested. So I think it's, what do you do that they don't? What do you know that they don't? And fundamentally, can you prove that? In a startup, that's obviously difficult, but then sometimes it's about individual track record, and it's about somebody who's got a track record of doing that in the past. I wouldn't want to be a 20-something, well, I quite would want to be a 20-something to be fair, but I wouldn't want to be a 20-something with no track record trying to say now, I'm going to go to an insurer with a great idea, because I think that's really, really tough.
Got a question from the audience here, so thank you very much for that. So keep putting them in. What's the panel's view on size of MGA? Is there an optimum or a maximum size that an MGA should be? Sam, you pick that, because you've got a collection of MGAs. So what view do you take about how big your group should get, or how big any individual element in it should be?
So I think there's a bit of a disconnect with this, if I'm honest, because one of the big challenges, as you were talking before, in terms of XOL costs, is that actually a lot of the time insurers are looking for scale in order to justify engaging with an MGA. But if I look at motor, sort of rushing in and going to really high volume straight away is extremely perilous from an MGA's perspective. So I think, we should probably spend more time working out a programme. I mean, whether it be a collection of MGAs or working together collectively to get a kind of larger group of business together. I don't know, but I think in terms of size, we should be concentrating on profitable business. And that's in everybody's interest. That's an alignment of everybody's interest. To the point made earlier, if you can put skin in the game, they're going to be more attracted to you. If you've got skin in the game, you certainly want it to be profitable for the future. But how do you do that? Well, you should never grow past the point of it being profitable, would be my answer. So if you think you can't get to that scale and do it profitably, don't do it, because it will be an incredibly painful journey.
I can see some nodding heads at the other end of the table. Richard, do you want to pick up that one? Profitability versus size, is that a dichotomy?
Well, I think there are some niche MGAs that have ambitions of scale. and of course, we all start out with ambitious business plans and things. However, we've worked with one or two, so cycle insurers. There's a really great example of a new marine cyber MGA that I'm well aware of. Now, clearly there was massive opportunity, but it's starting out with nothing. So, to the point earlier around the new normal, actually the storytelling and getting that capacity on board with the belief that this is genuinely a solution that this MGA can provide. And we've been watching afar from how well that's actually doing. But there's some other great examples of MGAs that started small and are now dominant. In the IP space, I referred to cyber already. Some in the D&O and PI space too. So we shouldn't necessarily always get distracted by that. I know insurers want scale, but we shouldn't get always distracted by that, because some of the tech startups are going to start small, but they will grow.
Now, Simon, you got a view on this question of optimum size of MGAs?
I think from a broker's perspective, I think you want to see someone that's going to be there for the future. You don't want to jump in and then find they're going to double their rates because they're not making any money because they've taken a big share or they're out of the market quickly. So you want some sustainability in that. But I suppose you also need them to also give you a bit of exclusivity. So you don't necessarily want them to be too much to everybody, because part of one of the benefits of using some of the MGAs is a bit of that exclusivity, particularly from our business, trying to win new business. If everybody can access them, you might as well be a general insurer.
So brokers basically want MGAs to be quite big, but not too big, a little bit big, but not very big. Yeah. So it's classic sort of broker stuff, as I'd expect. But I think that what generally happens, I've said this quite a bit, that MGAs, it's not easy to get started. It's certainly not recently. It's not that easy to get started. But once you do, you can get a bit of wind behind you, and suddenly you're at £10 million of GWP. And then what do I do? How do I go to 20 and 50? And do I want to go to that size? And what sort of investment am I going to need to make to get to that sort of size? So I think what often happens is there gets a bit of a plateau a certain size when you have to make some big strategic decisions about technology, about staffing, about who you're going to partner with, about capacity and that sort of thing. So I think there's that sort of 10, 15 million of GWP, maybe 5 to 15 million, which is quite typical when you look at, I think, with the MGA membership, and then it's a question of what do I do from there. So if that answers the size question.
Also on the size question is consolidation. I mean, consolidation is sweeping across the insurance market wherever you look at the moment. So how does consolidation play out, Clive, in the MGA space? Because you play there. Yeah,
we do. I think consolidation is clearly much easier, I would say. I say this working for a consolidator, if you like. In the broking space, but then broking's easier than underwriting anyway, we all know that. So I'm going to come across somebody who doesn't like brokers, aren't I? It's terrible, I love them. But I think in broking there's just more brokers to go at, and the ability to generate returns is probably greater. The challenge I think with MGAs is that when you look at valuing an MGA, good MGAs are probably already doing all the stuff that you would want to be doing, and it's much harder to generate margin out of that. And then the ones that aren't, you ask yourself the question of why aren't they? Why aren't they doing the things that you're already doing? Is it because they don't know, or is it because they can't? So I actually think we've seen a bit of consolidation in the MGA space, but clearly not as much as there is in the broking space, where there's deals being announced every week. And I think it's because of that, because there's generally a dichotomy between those that, the very valuable MGAs and those that people look at and think, what value is there?
So another question here, which sort of follows up on some of the discussion we've had. It says the panel noted that long-term sustainable capacity and delivery of profit is crucial to the MGA. And we know that the London market in particular, there's a huge focus on underwriting profitability at the moment. So it says, what is the panel's view on how well MGAs actually respect capacity and deliver profit for the carrier? Who wants to pick that one up? Who delivers profit for the carrier?
I think it's that life cycle, isn't it? I think it's that, Sam said at the beginning, sometimes some people want to get a big foothold straight away, and you see them writing all sorts of stuff, and then they go and start cleansing the book 2 or 3 years down the line once perhaps some of the losses pick up, trying to make that profit at that point. So you definitely see that in the market. A new MGA coming in sometimes will go hell for leather, no historic issues there, and then that starts to slow them down a little bit later on down the thing when perhaps things start to change.
I mean, I think it depends on the line of business. There are certain lines of business that's incredibly hard to generate profit for the carriers. I mean, I've not seen any MGAs go in with ill intent. Probably some naivety in the market and also shifting sands, as I say. The XOL cost has definitely changed over the period of time just that I've had pucker in the market, and you can't always plan for those things. But I think that the important thing to realise, if there's sort of new people out there that are looking to set up their own MGAs, is that you can't not respect capacity, because if you don't, they will hit you hard and fast, because they've got a lot of experience in this market and they're not about to continue to support business that they think they're going to lose money on. So it's, it isn't easy, and I think there needs to be more of an alignment between capacity providers and MGAs, and I've got all sorts of views about how that could potentially come together in a better way. But I do think that it's a tough market.
I think we've said already that it's partly, or I've said already, it's partly about what you know that they don't, and I've worried in the past about why we're not growing as much as we should be. Most people who've worked with me will recognise that, and then I've also worried about why we're growing much faster than I thought we would be, and is that because we're too cheap? Is that because, and again, back to this point, what is it that we know? Are we cleverer or more stupid than the market? And that has to be the fundamental. I mean, for me, it's not even a question. The ability to make money for capacity providers, or the fundamental of making money for capacity providers, outstrips everything else an MGA does. There is nothing else more important.
Well, Richard, you've got a sort of bit of a broader view of the market. Where do you see this long-term sustainability and profitability equation playing out?
Well, I'll be interested in Sam's views in a moment, but this alignment of interest, I think, is pretty key from the outset. So, if you're in a new start position, then you might be really experienced, but no experience in running an MGA. You might be, a credible having a really good track record to be able to demonstrate profitable underwriting is absolutely key. So how best to do that? So one of the suggestions is this having skin in the game. So you put some of your own capital or some capital that you can source alongside that of the capacity. As I mentioned, potentially to protect your position, but also just to really demonstrate that you believe in your ability. Now that's easier said than done, but there are people doing that. But Sam, I'd be interested in your views on that alignment piece.
Yeah, I mean, from my perspective, there absolutely needs to be more capacity providers investing in the MGAs. If you look at the success stories, Insure the Box is a great example of where one of the capacity providers did very well as an investor, and they were an underwriter as well, but there was more options on the table. So for me, if you're an investor in the business, then any revenue that is attached to the MGA is also of benefit to you. what you've found in the past a lot of the time is you'll have an MGA that may be distributing through brokers, may have direct distribution. The underwriter is only getting the benefit on the underwriting profit, but as we all know, there's lots of additional revenue streams attached to any line of business. If they're also getting the benefit of that and long-term getting the enterprise value of an exit, then the conversation changes. And if you look at where the world's going at the moment and the amount of changes that we've got going on, underwriters do need to be a little bit bold. They need to make sort of brave steps into areas that they've not been in before. Now, if you're doing that purely on the basis of underwriting profit with no other upside for the future, you're inevitably going to be nervous. And what's going to happen is capital from outside of the market is going to come in and fill the space. And they will get the edge in those areas, and you won't be able to pull it back. So for me, the conversation should be around who's going to invest in those MGAs and then support them from a capacity viewpoint. I don't know if you're...
Yeah, no, I agree with that. The key thing is if you've got strong results, then you're going to participate in the profit. If you haven't, then it's going to focus your mind on trying to fix the problem if you can.
And your partner's mind on fixing the problem as well, because they're probably sharing in the loss as much. Yeah,
absolutely,
it
focuses
that's
everybody's
the skin
attention.
in the game, isn't it?
Yeah, exactly. Yeah.
Can I just follow up on that? So why would an underwriter working in, and I know we talk differently maybe about alternative markets, Richard, that you've specialised in, but why would an underwriter in a major insurance company want to do something innovative, at the moment? What's in it for them? That's, I think, some of the things that we as MGAs run into is that there is just, with regulation, with the challenges, with a hardening market where rates are going up, what's the incentive for somebody to do something different via an MGA?
That's a good question. Well, it is, but from why do people set up MGAs in the first place? One of the reasons is because there's an opportunity, there's a niche somewhere. So it might be a gap opening up in the market, and that might be through the exit of somebody else, but it's potentially more likely to be a new opportunity. So I mentioned this marine cyber piece. Well, cyber wasn't something that we were speaking about very much at all that long ago. Intellectual property, another one. It's been widely misused as a phrase, but that's another area. And there is one MGA I can think of that's done an excellent job in that particular area. So it's would be some diversification for that underwriter into a new area. Well, that's against a backdrop of capacity perhaps constricting and actually focusing on much more profitable things. So you're right, why would they do it? Well, they've got to believe in the story, and there's got to be some good upside in it, isn't there?
Simon, I've got a question here that's definitely for a broker. Is broker consolidation a real issue for MGAs, especially given some of the large consolidators' placement models?
Yeah, I would suggest it probably is. I think, and that's the opportunity for us that are left that aren't being consolidated, that we can access those markets. But I think if you're trying to put a distribution plan together as an MGA, a new MGA, trying to second guess who's going to get bought tomorrow is probably a struggle. I think that's where you've got to work out who you're going to partner with. But I'd imagine there probably is opportunities with the consolidators as well. Clive?
Yeah.
I don't see it myself. I probably would say that, wouldn't I? But I think if you've got a specialism that people really want, then they're going to come to you, and that's what we find.
So you rather sort of dismissing Simon's concerns about the...
I always dismiss everything Simon says.
You do, okay. All right, well, we know where we stand, don't we? I'm glad I separated them. I've got a couple of questions here, which we're talking about the life cycle of MGAs, and of course there is an end to a life cycle, and there are a couple of questions here which touch on exits, which was something I also wanted to raise, because we are seeing new capacity providers, new capital providers who have they've got different ethoses, haven't they? Different strategies, and some of the capital providers out there at the moment that they have very short-term horizons. So one question is, how does that play out? if you get into bed with one of those. But I'll merge that with a couple of the questions here. One says, how can an MGA optimise its exit value if it has skin in the underwriting game? Doesn't this add an unnecessarily complication for buyers? And I think if you put that together, there are issues about how it ends. Does it end in consolidation? Does it end in a buyout? Where does it end with replacing the capacity, replacing the capital? The challenges are getting broader all the time, aren't they? Richard, do you want to?
Yeah, I don't mind starting with that. So to pick up the point about the divorce before if we're agreeing the prenuptials sort of thing, you're right. Potentially owning an insurance or a risk retention vehicle of some description to participate in the underwriting. Yes. Yeah, that is another thing to think about. However, there are specialists out there, and there are some exhibiting here that specialise in run-off and acquisitions of ongoing insurers, or you can have someone like a specialist insurance manager run that off for you. So that's one. I think it's worth using this opportunity to. There are sort of common misconceptions around alternative capital, and here I mean particularly insurance-linked securities, so ILS, and we spoke briefly earlier about this, Clive, and Sam, you sort of refer to alternative. People often refer to ILS as this, sort of utopian, sort of panacea type solution. Yes, there are potential opportunities for ILS providers, but to your point, David, they are looking usually for a short-term return, not a longer-term. So the alignment of interest potentially isn't there if you're looking for that longer-term support. Now, that's not to say there isn't a place for that somewhere on the programme in the reinsurance structure, but if you're thinking about an MGA tapping directly into ILS, I think that's going to be on the difficult pile.
You agree with that one? Yes?
Yeah, we've looked at that. We've looked at ILS, we've looked at alternative capacity, we've looked at reinsurers, and I think the point that's been made, I assume it came from the audience, that how does an MGA optimise exit value if you've got underwriting skin in the game? I think is a really good observation. I think it's partly about, for me, it's mainly about choice. If you're doing that because it makes sense strategically for your business, then you will get optimum value. If you're doing it because, frankly, your underwriting results are under extreme pressure and it's the only way you can do something is to take an enormous ratchet on your commissions, then I think that's a different thing. But if you're doing it because you have got real faith in your underwriting, and your backers are happy with that, then I think that, there's lots of different ways of exiting. It doesn't always have to be sort of a PE sale or a sale to a consolidator. There's lots of different ways of doing it.
Sam, you've started a lot of MGAs. When you're starting them, have you got an eye on the exit strategy right from the start?
I have now. I think I'm getting older and I've got children. I think, again, naivety plays a part when you first start. You're just trying to build something and you get it going and you kind of move forward and see what comes. Then you learn, and I think having an idea as to where you want that end game to be, and I do say this to anybody that I talk to now that's setting up a business, you should be thinking about who potentially would be interested in buying your business before you've even started. Because if you don't do that, you are going to run into difficulties and you don't want to be left with only one option. I personally think that MGAs are massively undervalued. I don't get it in terms of the way that the market views MGAs. I think that they've had a bit of a kicking over the last few years, and I think it's undeserved because a lot of the MGAs are taking skin in the game and are, actively participating probably in a much more significant way than brokers, and that's not I'm sat in the middle, so I should be careful here. And I've also got a broker, so I do see like the different sides of the equation, but the reality is that brokers are very much a sales machine. They are becoming more cognizant of that underwriting result, but MGAs really are on the front line. So I think in terms of the opportunities for MGAs, at some point some smart investor is going to come in and say, actually, actually I can get a hell of a lot of scale and expertise and areas of the market that I don't currently have by picking up MGAs, which are probably undervalued right now. But understanding from an MGA viewpoint who those potential customers could be, and there's a lot of opportunities in weird and wonderful places now. You know, there's so many new types of businesses that are starting that actually an embedded solution, insurance solution, would be very attractive and would make their proposition more attractive. You start to see where those things can kind of come together in quite a positive way for the market.
So the investor that could come in and change the perception of valuation of MGAs, is that going to be an investor that's already got a presence in the insurance market, or do you think that's going to be an external investor that's seeing an opportunity because of that poor valuation?
I have to be brutally honest here and say that my experience is that we're still a bit short-sighted in the insurance space. I think it will be an outside investor that comes in, and probably overseas. I mean, the Yanks are certainly showing an active interest in the insurance market at the moment, and as I say, there's businesses that fit together very nicely if you take a sort of helicopter view, and then that will push the valuations up. And the question is, do you want to buy a load of brokers, you know, and consolidate like in that way, or do you want to buy an MGA that's got control over the rating and potentially very specific niche and is also at multiples that are less than brokers currently? I don't think it's going to be that difficult for them to see the opportunity.
Right, Simon, looking at MGAs as a broker, do you look at them and think, I'm not sure that one's going to be around for much longer, they must be nearing their exit strategy? Does it play on your mind when you're looking at them?
I think bottom line is it depends what they're doing. If they're causing you a problem by taking business off you, you know, there's MGAs in the market now that we know are very, very active, and you may think, you wonder how long they're going to be around for. Are they looking at a sale? Are they just building their book? Can you afford to miss that market on perhaps certain risks? Maybe you don't want to build a huge account with them, but can you afford not to use them periodically on certain things? Yeah.
A couple of questions here. I've got one to finish up with, but before we do that, this is another one I think needs just have a fairly quick response down the table. How far does the panel really feel MGAs have evolved over the past 10 years, and what does one look like in the next 5? And perhaps you can marry that with what do you think is the biggest opportunity that's going to emerge in the next 5 years? So, Clive, evolution over the last 10 years, what have been the landmarks? And finish up with where's the biggest opportunity going to be in the next 5?
Well, I think it's obvious that there's been this significant growth in the number of MGAs. Has that landscape changed dramatically over the last 10 years? I would say probably not, other than probably in scale, in size, so the number of MGAs, but I don't think there's that many that are very, very different. I beg to, somebody may be able to tell me differently, but not that many that are very, very different to what they were 5 to 10 years ago. So that would be my view on that. And then I think the big opportunities really are technology, bound to say that, but the investment in technology and the use of technology will revolutionise underwriting. There is no question in my mind over the next few years that will revolutionise. What do they say? People underestimate how much change there'll be in a year and massively underestimate how much change there'll be over 10 years. So I think technology. I think the other second opportunity is the creation of new niches that we've not even thought of. It's not the classic niches that we know of today, but the creation of new niches. And then the other one is the breakdown of geographical barriers. So we're generally, and I know we are, very focused on the UK, but we've got great skills in UK MGAs, and why can't we take those to some markets that are less developed and less competitive than it is in the UK?
Seems perfect platform for Sam, having gone marching into Australia. But your time in the MGA market, how have you seen it develop? What are the key landmarks? And for you, where are the biggest opportunities?
I mean, I think broadly, you're right, it hasn't really progressed that much from what I've seen in the last 10 years. I do think that there is a wave of new insurtech MGAs that are doing things quite radically differently. They just haven't got scale at the moment. So if you're looking at it as a percentage, it would be a tiny percentage, but are they doing different things? Absolutely. I'm a great believer that technology will change the insurance business in every area. I think the last frontier is definitely claims, which everybody's still really struggling to make that work and work effectively. But for me, I would say embedded insurance for sure, working out where we can work alongside an existing marketplace. And of course, I'm going to say overseas as well, because I have had that experience. I've been in the States, I've now got the business in Australia. And, the one thing we should be really proud of in the UK is we've got the most sophisticated insurance market in the world. The stuff that we do over here that is absolutely not happening in any other country that I've seen so far, apart from maybe South Africa. So yeah, I think there's some huge opportunities. People just got to be a bit braver, and then they'll be able to take advantage of them.
Just before I pass that question down, you mentioned insurtech. Is there anything you've seen in the insurtech space that's made you go, wow, that is going to disrupt us?
So I've seen loads of stuff that makes me say, wow. Like, there's so much stuff out there to get excited about. The biggest challenge is for them is getting it embedded into the ecosystem, which is a closed shop. It's a bit like Fight Club out there. So they make you stand in the rain for a week and tell you can't come in. But there is incredible technology. I mean, I saw a piece of technology that could sit on your home Wi-Fi system, and it would be able to establish everything that was connected to the Wi-Fi and then relate it back to your insurance policy to see if you're undercovered or overcovered. That sort of stuff is phenomenal, and consumers will absolutely eat it up. But how many of the insurers are looking to integrate that technology? Or to your point, how many are saying, actually, it's a hardening market, I'm making profit here, where's the appetite? And I think it's that ability to see into the future and understand that whilst it might not be important today, if you don't do it now, in the future, you're going to miss out on a lot of business. That's got to be the critical factor.
So Simon, landmarks in the last 10 years in the development of the market and the big opportunity, as you see
I think a lot of the big brokers have developed their own large MGAs, and that's been a big part of what's gone over the last 10 years. But then what's happened, I suppose, in the last few years is they're still dominant, but they're less influential now. I suppose they were very, very active. They've grown, they've got their scale, and now you're seeing other people coming through and wanting to try and push through, probably being quite aggressive, very niche, as Sam said. New areas. I think it's them getting the traction of those products that they're perhaps talking about becoming more mainstream, and people looking to buy them. And I suppose that's a bit of a trying to get them to a point before the capital runs out. As in the money that they've got invested in them. Does the market bite and they get traction, or does it not quite get there and they just disappear and Mark II comes along or whatever? But technology and the use of technology, I think better use of technology. I think some of this technology that's been used is a bit sticky plasterish. It's almost like we've seen something over there, so we'll add that to our product, but it's not fully integrated. It's a nice to have. Need to sort of integrate these things better. And I think use of data to really understand niche and probably areas that are a little bit more tricky to write business in as well. So add something different. So from a broker's perspective, lots of people want to do vanilla commercial, but what about the stuff that sits around the outside where they can use technology to do something different?
Richard?
So I think I'm going to focus on the opportunity in the future part rather than what's happened.
Go on. Sure.
So undoubtedly data and technology got a role, and there's a long way for that stuff to go. In terms of opportunity, not necessarily niche, I think this is going to be more mainstream going forward, but ESG and the opportunities around that. So whether that's new start or adaptions by existing MGAs, I think we should keep a strong eye on that, as traditional markets potentially are slower to to adapt, we'll see. I'm also interested in the role that rating agencies might have in looking at MGAs. This may or may not be a red herring, but when you're comparing competing MGAs, how can you, is there some metric by which you can use to compare and contrast and add some sort of metric to the quality of the MGAs that you're going to be dealing with? I don't know. That's an interesting one, and one for probably the audience to think about. But and then lastly, I would say taking the best of, from an operational perspective, taking the best of what we've learned over the last 18 months, trying not to forget that and apply that going forward, along with the best of how we operated prior to the pandemic.
Thank you very much. That's so the future. Technology, 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 and technology is what I took away from those answers, with a few nuances along the way. That's all we've got time for. Can I thank our panellists, Richard Le Tocq, Sam White, Simon Magden, Clive Nathan, for a fantastic insight into the life cycle of an MGA. Thank you for your questions. I think we've all earned our coffee break. Thank you.